Trade planning with options. Katie, show them this absolutely great work and how you use the Tasty Trade platform.
Hi, this is Katie with askSlim, and this is a trade planning with options video on August 31st, 2023. Today, we're going to look at a defined risk long premium trade idea in McDonald's. First, our legal disclaimer: the options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow these trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email matt@askslim.com. Let's get started. So we're going to set up a bearish options trade idea in McDonald's. The reason I selected this symbol is because McDonald's is down here on the bottom right in the in sync box on the cycle low timing tracker. Generally speaking, symbols in this box can be expected to show weakness and possible breakdowns. I'll explain why that is when we look at the charts. McDonald's is also showing very bearish for the short-term time frame on our market conditions monitor. So let's go and take a look first at the weekly chart. This is the weekly chart of McDonald's. On the bottom, we have these 27 bar cycles. Those cycle brackets are a drawing tool. The actual cycles are outlined up above around the candlesticks. These blue vertical dashed lines represent a period of time of about plus and minus 3 weeks around the ideal cycle trough when we would expect McDonald's to make an intermediate low. That period of time is from September 18th to October 27th. So notice in this current cycle that we tagged the bottom of that intermediate target zone in light blue and backed off from there. Our proprietary momentum indicator, the reversal scout, which is this green and purple ribbon on the chart, turned negative. We are in the support zone right now with another 3 to 8 weeks in this declining phase, targeting between the bottom of this support zone at about 275 and the 78.6% fib retracement at about 269. Switching over to the daily chart, we have a relatively large 54 bar cycle. This current cycle is due to form a low between October 20th and October 30th. Note that that period of time is within the time period on the weekly chart when we expect the low to form there, and that is why McDonald's is found in the in sync box on the cycle low timing tracker, because this daily cycle syncs up with or fits within that weekly cycle timing window. Now we formed our last daily cycle low right here and began to move up into the rising phase of the cycle that we are in, approaching the bottom of this resistance zone but unable to make much progress. Notice the wicks on the tops of these candles showing selling pressure. We also have negative momentum with the reversal scout on the daily time frame as well, and with the slim ribbon, which colors the candles red, green, or gray, depending on momentum conditions. Now we'll go over to Tasty Trade, but first please go to the askSlim homepage, hover over the Marketing Partners tab, and click on Tasty Trade, our preferred options trading platform. This will take you to a link where you can open a Tasty Trade account, and if you choose to do that through our link, that helps you with some special bonuses and also helps us. Now over to Tasty Trade. McDonald's has an IV rank of 5.4 with implied volatility over in these expiration cycles in the teens. Therefore, we're going to set up a bearish long premium trade idea which will benefit from lower prices as well as an increase in implied volatility. Now we're looking at the October 20th expiration cycle, because that matches closely with the weekly and daily cycle timing window synced troughs. If we go into this expiration cycle and purchase the 290 put, that requires us to pay a debit of $9.15. So max loss, $915. That is also our buying power requirement. If we look at the risk graph, you can see we have profit potential below 280.85 and a loss zone above that at $950 max loss. So in order to improve our cost basis on that put, what we're going to do is go into an earlier expiration cycle and sell an out-of-the-money put against that long put. So let's use the September 15th expiration cycle. Now notice down here on the bottom left, it has extrinsic value of $174 that we have purchased in that long put. What we want to do with this out of the money put that we're going to sell is wash out that extrinsic value. So we'll sell the 280 put. That is the only out of the money put that has an extrinsic value greater than 174. So now we have a $10 wide put debit spread over two different expiration cycles. So this is a put diagonal. Aside from covering the extrinsic value of the long option, the other thing we need to check when setting up a diagonal is that we don't pay more than approximately 75% the width of the spread. So with a $10 wide spread, we don't want to pay more than $7.50, and this sets up because our debit is $7.15. So then what we're going to do going forward is either allow this nearer dated expiration to expire if it's out of the money, or roll it. And when we do that, we'll collect an additional credit which will further reduce our cost basis on that long put out in October. Now, the best time to place this trade would be on a bounce in McDonald's. So we'll follow up on this trade idea next week. That's our trade planning with options video today. As always, please feel free to reach out on Discord or via email to katie@askSlim.com if you have any questions or feedback.